Oh man, Bitcoin crashing to the downside, and I wish I could just say that this was a normal correction, a leverage flush up, but this is a bigger macroeconomic shift. There is a real reason we are dumping here right now. I need to break this down and a lot more. Smash some likes. Do not forget to subscribe, guys. A painful day across the market. Bitcoin down 6% already today, with many altcoins suffering. Is this a surprise? Well, first and foremost, no. Take a look at what I had to say yesterday. I mean, people were shouting that this was clickbait when I put this could be painful. Now let's listen back to exactly what I had to say. Can we break this to the upside, retest, and start working our way back up? Because remember, what is it we need? Let me just get you back to the daily chart. What is it we need in this pattern? We need a higher high, right? Look at this pattern. Look at this pattern. We created this peak. We created this higher low. Now, what do we need? You need a higher high. It's very, very important that on this leg up here on Bitcoin, let me get a thicker brush for you guys so you can see. On this leg up, you can work your way up, get a higher high, then you can come down, no problem, create another higher low, and you can start continuing to trend yourself upwards, okay? That's what we want here on Bitcoin. We do not want to curl over. If we fail here on Bitcoin to create the higher high, the scenario we are then getting is this. There's your high, there's your low, you fail, you curl over, and what do you notice when that happens? You're forming another triangle, right? You're forming a really, really big consolidation triangle, which goes here and here, right? And you end up just consolidating for a period of time here on Bitcoin. So there you have it, guys. Exactly as I called just over 36 hours ago on Bitcoin. Had you have watched, had you have followed the TA, you wouldn't have been caught out by this dump to the downside. In fact, you understand it's part of structure. But that being said, even though the technicals are marrying up with what we're expecting, I have to admit that something else has happened, which we need to be very, very wary about. And it's this. It's the ISM manufacturing PMI, and you're probably saying, Ijaz, what are you talking about? I want to trade altcoins. I want to make money in crypto. Why are you telling me about this ISM manufacturing PMI? And this is fundamentally what makes this channel and community different. What I try to do here is bring you the research, bring you the data that actually matters versus me just being a moon boy and saying 1000x Bitcoin going to the moon. This data, I'm trying to break it down as concisely as possible, tells you about the state of manufacturing in the US. Hold up, do you want to learn how to trade? Then you need to jump into our Telegram community. Link is in the description. In our Telegram community, I share my altcoins. I share how I do my trade setups, how I do my stop losses and take profit, so you can learn to become a profitable trader. Check it out, link is in the description. The factories, what is the output of the factories? Now, why is this significant? Well, first and foremost, the reading came in at 50.3. Very quickly, anything over 50, the way this reading works, means you're expanding your production. Anything less than 50 marks a contraction. Now, why is this important? Well, this is the first reading in 16 months. You can see all of these readings are below 50. All of these. So it's showing contracting. Now, why do we want them to contract? Well, think about it. We want inflation to come down. We want Jerome Powell to start the rate cuts. He told us he's going to probably do about 3 rate cuts this year. But now markets are getting worried. If manufacturing is starting to expand again, could we be heading into a period of more inflation? Is the economy more robust than we had thought? Has Jerome Powell not broken it? In which case he has reason to keep rates higher for longer. This is what is panicking markets right now. Markets are sitting there going, hang on a second. We had priced in that the first rate cut could be in June, and now we need to ask ourselves the question, do we need to unwind this? Because 62% of the market still, as we sit here today, prices in that we're going to get a rate cut. But what if Jerome Powell changes his mind? So we are seeing a rotation overnight in towards risk off again, and this is a very important narrative. Remember, some of the excitement we had from January was that Bitcoin was like, you know what? We're going to do our own thing. We kind of don't really care what the traditional markets are doing. Bitcoin's excited because of the spot ETF, because of the halving, which we're going to come on to, the exciting halving. But in the back of their head, they also had that risk was on. The S&P, the Nasdaq were going to all-time highs. But now you sit here, I mean, we can take a refresh here on traditional markets, take a look. You sit here and look at the pre-market, we're seeing red. Red in the US markets, Nasdaq, S&P, Dow futures. And we take a look at that, and that's fundamentally because risk is rotating off. How do we know that? Take a look at the dollar index. The dollar index here, if you look at the daily chart, look, it's climbing, right? The dollar index is showing some strength here. I mean, yesterday in the UK was a bank holiday, but look at this, a big, powerful day for dollar index. And this is where things can get worrying. We can also take a look at the US 10-year. US 10-year spiking up yesterday, now sitting at 4.367. This shows that risk rotated off, which is not good for crypto, and it's not good for altcoins. But the message I wanted to bring to you first and foremost is, one, we are still within structure. I'm going to show you how we're still within structure in terms of the TA, but I just wanted to put that on your radar, that if inflation wants to rear its head again, this could be a worrying narrative, because if that means Jerome Powell uses these data points to say, oh, look, the economy is fine, I don't need to do a rate cut, that can put just a bit of a spanner in our works. Now, of course, it's not just about, Jerome Powell and the rate cuts. Bitcoin's also moving on this narrative. The fact that we are 17 days away from a Bitcoin halving. What a perfect time for market makers to try shake you out. And in fact, I tweeted this. Go check out my Twitter. I said, guys, this is not a dress rehearsal. You're either ready or you are not. Are you ready? We've had the bear market. You've had plenty of time. You've seen what Bitcoin has done after every single halving. You'd have to be almost silly to kind of, undo the statistics and to deny them, right? So you're either going to sit there and, procrastinate away and not get involved, or you're going to participate. You're going to change your life. You're going to make a difference. You're going to have conviction and do all the things that you've learned through the bear market and onwards. And here's the other thing I said. Market is trying to shake you out one last time before the Bitcoin halving. But I'm not leaving. And the question is, are you going to leave? Because the market makers know. They know. That's smart money. The problem is the average Joe who I'm trying to communicate with, somebody who's trying to figure this out, trying to build financial freedom, is going, I'm going to get shaken out. What if Bitcoin tumbles? What if we fall down towards 50,000 and 30 and 40 and all these influencers start making scary videos? But you got to be smart. You got to rationalize what's going on and understand that, hang on a second, whose interest is it in right now to be shaking me out of my Bitcoin? Who's making a final attempt 17 days away from the halving to take my Bitcoin? And I can show you the evidence. Because every time I share this with you guys, you probably just look at this as numbers. But for me, it's not numbers. It's hardworking people like you on the other end of these videos, working hard to learn how to navigate through crypto, that keep getting yourselves wrecked. And it's why from day one of this community, I've always said, stay away from leverage. Stay away from leverage, right? Look at this. In the last 24 hours, 500 million. 500 million. That's $500 million, guys. $500 million wrecked from the markets in 24 hours. And who do you think it's going to? It's going to the bigger hands. It's going to the market makers. It's going to the bigger players who are taking your money right now. And the question is, are you going to keep letting them do that? We're not leaving. I'm not leaving. You look at the market yesterday, sat here at 79 in extreme greed. You best believe that when this figure refreshes tomorrow, it's going to drop back down again. People scared it a little bit again. So you got to sit there and understand, hang on, what is going on here? This market is buoyant. Why am I getting shaken out? Why is it that a day like this, like 6% down on Bitcoin, is scaring me out? Where if I switch up to the weekly view, should I be that scared? I mean, we've had crazy weeks here of 22% and 9%. Why should I be worried if a day is down 6%? What if we make it up in the rest of this week? And you could just bounce back and this could be a really powerful week, or at least a powerful month. So you got to understand whose interest is it to shake you out at the start of April, a Bitcoin halving month. And so I want to share this with you. You saw in my previous video yesterday that I even predicted this pullback. If we didn't get the higher high, I called for the fact that we could be coming back down to support at 64.5. You can see that's exactly where we are, there or thereabouts. The question is, what next? Because basically what we formed now, like I shared in that video, is we basically formed a triangle, right? I even predicted the next pattern and said, look, we're going to come into a triangle. And that's exactly what happens when you fail to make a higher high. And if you guys want to learn TA, ijazcrypto.com/TA, take it. If you don't want to take it, don't take it. I don't care. You can learn TA from somewhere else. If you want to learn it in structured curriculum, take it. I don't need to force you to take it. It makes no difference to me. I put it there as an educational resource for you guys to benefit from. It took me over 10, 12 years to learn this stuff. You guys can learn it through a structured curriculum if you want to. Now, we're in a triangle. If this breaks down, You best believe we could be coming down to the bottom, 57,000. Are we ready for some of those levels? Imagine the pain, imagine the fear and greed. Are we ready to nibble? You best believe. Now, if we can manage to reverse and get back to the top side and break to the upside, same thing still applies. It's irrelevant if we cannot get the higher high. We've got to get the higher high in that 74,000 region. Otherwise, it's pointless. We've got to create the higher high. Now, if we bring out the EMA ribbon, you'll see something interesting. We're just consolidating into our daily EMA ribbon. All this fuss, all this panic, all this drama, all this worry for us to come here and touch our EMA ribbon. We've not even created the lower low, right? I mean, on this candlestick here, we fell as low here as 60,800. We've not touched that yet. So at least we've got until that level to kind of start thinking, okay, maybe if we come back down there, boom, come back down there, we can still hold support from there, create a W pattern and get out of the woods. Right? If we lose that, then we start worrying. So for me, the only level I start going, okay, this is going to become a longer term pullback is if we lose the EMA ribbon, which would require a daily candle close below 61,800 there where my cursor is right now. And let's just go back to what I said in that video after I shared the TA, that 74,000 level. We got to break above that. If we don't, we could be consolidating for longer here. And if we are, you guys need to get ready for some more pain. If we cannot break 74 right now, you guys have to be prepared for 64,600 because if it's forming a triangle, that's naturally where it's going to want to create its higher low, right? And so it's not complicated, guys. You can see the TA structures. You've just got to be disciplined enough to follow it and not get panicked when the rest of the market is panicking. So important moment for the crypto markets. Remember, if you're leveraging, if you're FOMOing into meme coins, if you're doing all that stuff, the time of easy money has kind of just got a little bit more difficult. Yes, we still got the Bitcoin spot ETF narrative. Yes, on top of that, we still have the halving, which is around the corner. But with that comes volatility. With that comes the fact that people want to flush you out and get you to sell your Bitcoin at discounts right before the halving, right before the thing that you know historically has always provided outsized results afterwards. But also, on top of that, this macroeconomic pothole in the road causes a problem. I'll continue to monitor it. I'll be looking for the other data coming out this week. We've got 20 odd Fed officials speaking this week. So expect volatility, right? It's going to be crazy volatile. It will. 20 Fed officials. You know they're going to say stuff which shakes the market, but that's why leverage is so bad. Leverage creates that volatility that takes what would be in the spot market a 1% down day and just kind of exacerbates it. So you're getting these crazy wicking candles which liquidates every single person like a set of dominoes. Once you flick the first, they all trickle the others, and before you know it, you got a big 10% down day on Bitcoin. So I'm prepared for lower. I'm ready to DCA, but I'm keeping an eye on this long-term macroeconomic trend, which is inflation actually done? That's what we need to get to the bottom of. If it is done, then great. Jerome Powell can let off the noose and start loosening interest rates, cutting those interest rates. If not, then maybe he's going to want to stay higher for longer. Whichever he chooses, whichever we are in, whichever point of the macroeconomic cycle we're in, it's going to have an impact on risk on assets. It's going to have an impact on our crypto and trading money. So if you appreciate type of updates live and when they happen, then smash up the likes. Do not forget to subscribe. Make sure you go watch this video here to get latest update on what's going on with Phantom, with my interview with Michael Kong. If you haven't watched that, you're definitely going to want to watch it. A big milestone for Phantom, a big pivot, a big change in their current guise. What does it mean for the future of Phantom? Make sure you go watch that. Thanks for watching, and I'll see you in the next one.